Larry Fink talks about oil and gas prices, where they're heading, and he was asked the question about oil because that was the topic, that was the focus. Oil and gas. Now, Larry Fink is a CEO of the world's largest asset holding company at over $9 trillion. Look, he could have talked about gold. He could have talked about silver. He could have talked about inflation, could have talked about real estate, could have talked about anything else, but he decided to talk about oil. Why? Because it's the most important commodity in the world. It has been the most important economy in the world, quite simply because of the industrial age. We need oil. Every car, every piece of plastic, rubber, everything needs oil. Even the clothing that you wear, we need oil. Okay. And so he's going to explain why he believes energy prices will be high. And I'm going to weigh in on a few things that he says.
Well, let's see what the ultimate outcome in Ukraine is. We are going to find new supplies of oil elsewhere. Maybe OPEC will begin to raise their production. The U.S. will begin to invest again back into our energy fields. Right.
He says we're going to find oil and gas elsewhere. OPEC is going to increase. The U.S. We're going to invest more money in the U.S. oil and gas industry, blah, blah, blah. Listen, he is completely wrong. Okay, OPEC Plus missed its March output quota by 1.5 million barrels a day. Now, if you watch one of my previous videos, I talk about why OPEC Plus, their oil fields are declining. Here's the deal. Every time you drill a well, that well will come online very strong, okay? And so the natural driving force of an oil well is natural gas. The pressures, oil and gas migrates to its highest point within its own structure. But in time, as that gas pressure declines, the oil production declines as well. Okay. And so oil and gas wells naturally decline over time, and it might come online at 100 barrels a day and might drop down to a few barrels a day. Shale oil and gas, which is the biggest producing formation in the U.S., is the fastest declining structure in the world, okay? And so under George Bush, we were producing about 5 million a day. Under Trump, we were producing about 13 million a day. And under Joe Biden, about 11 million barrels a day. How quickly the shale declines is unimaginable when it comes down to the effects on output. And so we're going to be in a mess. So he's putting faith in U.S. shale. Listen, we don't have the same shale formations that we had back in 2012 when the shale revolution was born. All the sweet spots are gone. So where else are we going to go? Banks aren't lending to shale because they lost their butts. It is the most expensive barrel of oil to produce. You need $100 oil to make a profit. You don't make profits at $60, $70 oil. It is the dumbest investment you can make. Okay. And so he's talking about, oh yeah, we're going to invest more money in U.S. oil assets. Where? First off, what formation are we talking about? I mean, all the good shale is gone. Where else are we going to go? And where are we going to get the money from? And then OPEC's, their oil fields are declining. Russian oil fields are declining. I mean, the most of the oil comes from fields that were discovered 50 to 70 years ago. Those fields are getting older. They are on the decline. We hit peak output in 2019. We're never going back to those numbers. There's not enough money flowing into oil and gas. So you are wrong.
High energy prices is going to accelerate decarbonization. More and more people say, I can't afford gas, I'm going to buy an EV. So we're going to see behavior changes. And over the next 3 or 4 years, we are going to see less dependencies, which is really good for the world. We're going to have a better mix of energy between hydrocarbons and renewables. And so it's about a 2 to 3 year possible uncertainty. But I actually love where we're going. Yeah. But it's going to be treacherous in between.
Well,
he says, I love where we're going, but it's going to be treacherous in between. And he's propping up renewables. He's propping up green technology. Okay. And I wonder why. If you look here, he's very biased. If you look here, he has an investment fund called the Sustainable Energy Fund, which seeks to maximize total return. The fund invests globally at least 70% of its total assets in the equity securities of sustainable energy companies. Sustainable energy companies are those which are engaged in alternative energy and energy technologies, including renewable energy technology, renewable energy developers, alternative fuels, energy efficiency, enabling energy infrastructure. The fund will not invest that are classified in the following sectors as defined by Global Industry Classification Standard: coal and consumables, oil and gas exploration and production, and integrated oil and gas. Okay. And so here's the deal. Oil was found underneath the ground, and all we have to do is burn it. It's the most combustible energy today, and it's the cheapest energy today. It didn't take a lot of ingenuity. Okay, of course, the invention of the engine, that was very ingenuitive, which was incredible, giving us the ability to produce more food than we've ever produced before and manufacture goods all around the world cheaper than we've ever been able to do it. But in order to keep that running, we need oil in order to grow. And so here's the deal. It didn't take that much intelligence to be able to burn oil, but it takes a tremendous amount of ingenuity, intelligence, invention, R&D to invent something to replace oil that doesn't have the impact on our planet. Now, that doesn't exist yet, guys. Oil was not invented. It was found. It was found, and we drill for it. As where this technology doesn't exist yet, guys. And he's saying, oh, yeah, we're going to have a 3 or 4, hellacious time of high energy prices, but I like where it's going. I think it's going to be good. And here he is pushing this investment fund called Sustainable Energy Fund that only invests in green tech. Here's a letter that he sent to all of his shareholders. Okay. This is part of the letter that he wrote to all of his shareholders. The impact of climate change. The global pandemic has served to forcefully underscore the global threat of climate change, how it will affect people's lives, and why it demands a global and ambitious response. The tectonic shift acceleration, the reallocation of capital in sustainable strategies has accelerated even faster than Mr. Fink anticipated. Pandemic notwithstanding, this has been facilitated by the increasing availability and affordability of sustainable investment options. Such tectonic shift in investor behavior will accelerate as asset managers are able to offer customized index portfolios to a broader group of investors, and as governments adopt meaningful policy responses to climate change. The net zero transition. There is no company whose business model won't be profoundly affected by the transition to a net zero economy. What that emits, no more carbon dioxide than it removes from the atmosphere. Mr. Fink predicts that companies pursuing a well-defined long-term plan to transition to net zero will distinguish themselves with the full scope of their stakeholders by demonstrating confidence in their ability to navigate the transition. Those who are unable to deliver such a plan will suffer financially. I love how he says distinguish themselves. And I love how he uses these words, profoundly affected by the transition to a net zero economy. They have well-worded phrases in there to make people believe, oh, we better transition, otherwise we're going to be left behind and we're not going to get any investment dollars. He's right. A lot of people divested from oil and gas and started dumping a lot of money in green, but look where it has gotten us today.
Well, you're making a bet that that will be the response. I would agree with you, but I don't think other people agree. I would say people are looking and saying, I can't go to the gas station anymore. It's too expensive. I'm buying an EV. We are seeing some of that. But on the other side, you're hearing people say, start drilling here
Absolutely.
again. Do you agree with that?
But Liz, we are drilling. Let's be clear. So let's talk about what has happened in the energy sector in the United States. From 2013 to 2017, we invested 40% higher than any other time. We over-invested, and we saw a lot of losses in a lot of the startup companies, a lot of the shell companies. And then, as a reaction to the overinvestment, the last 4 years, we underinvested by 40%. And so much of it has to do with these cycles that people have missed. In my CEO letters, I've always said, if we're going to have an energy transition, it has to be fair and just. This is not fair and just. And I said, you should never divest of energy companies. We have to be working with them. I have meetings at least once a week with 1 or 2 different CEOs from the energy industry, how they can decarbonize, but at the same time, how can we invest with them so we have a fair and just transition, so we could have the amount of energy that we need, so we could have independence.
But in the short term, is it 175 a barrel? Is it 180? Is it 110?
No, I don't. I think it's going to be elevated for a long time until we have these corrections, and so, we are going to have to be living with higher energy prices, like we did in the early '80s. Early '80s, I mean, energy got as high as 149. I don't expect that to be the case, but could we see energy between $90 and $110 with maybe occasional spikes? Certainly, but I do believe over time we're going to find that substitution, and maybe there's going to have to be some type of, in Europe right now, there is fiscal stimulus to helping the consumers in higher energy and heating costs.
The transition.
That's already happening in the transition.
People forget that you are for a transition. They think.
So here's the deal. I mean, he keeps pushing the green agenda. I mean, he makes it seem like, oh yeah, energy prices are going to go way up, but we're going to come up with a new tech. I mean, he keeps pushing that agenda. Okay. And so, because he makes billions of dollars from green tech, why not? Okay. And so he said that we overinvested from 2017 or 2013 to 2017. And shale companies lost money. Listen, shale companies lost money quite simply because it's the most expensive barrel of oil to produce. Now he's saying we need to invest more. Well, who's going to invest in it? They lost. Are you going to, Mr. Fink, are you saying that you're going to contribute to that? Or are you just going to keep dumping money in green, keep raising capital for green? Listen, the gentleman that turns more heads than any other financial institution is pushing green and saying, don't worry about it, guys. OPEC will take care of it. Don't worry about it, guys. U.S. shale will take care of it. When that ain't happening. It's not happening. I want to close this video with this article here. JPMorgan immediate EU ban on Russian oil can send prices to $185 a barrel. Right now, WTI crude is $102 a barrel. Brent crude is $107. Natural gas is $7 per MCF. Guys, we're in for some treacherous times, just like what Larry Fink said. High energy prices are here for a long time. And he is saying to the world, listen, I think that OPEC's, going to find more oil, and so we're going to dump more money in U.S. shale. Listen, I don't see a tremendous increase in production from investment, okay? As the world declines and demand increases, we're in for some very high times of oil prices. I do believe that there's a possibility that we are heading into a recession, but this bodes well for oil and gas, for oil commodities such as oil. During times, and if you look up JPMorgan Chase and also some of the top analysts out there, they are saying that oil bodes well in turbulent times. When we are en route to a recession, oil does very well. So right now, with a lot of people pulling out of real estate, a lot of people pulling out of the stock market, a lot of people are dumping portion of their funds in oil, which is a very smart move. But the problem is there's just not enough shale out there to do what we need to do. And so I focus on conventional oil, which is a small drop in the bucket. But the most patriotic thing you could do right now is to Drill, baby, drill. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe and we'll talk soon. And look in my description below if you're interested in investing in oil and gas. There's a link to fill out a form if you'd like to chat with me and learn more. Thanks.